Hi, everyone. Welcome to another week of swings and bullish setups from Black Ink Economics. I'm here in the headquarters of Black Ink Econ, i.e. my home office. This week, I have some really great tickers. Last 4 or 5 weeks with every video newsletter, we've been finding quite a few runners. And I'm really excited to show you guys this week's really big one. So I'm going to turn on my share screen and you guys can get to see what's on my screen here and what's in the newsletter. Before we get into it, I did want everyone to be aware that I'm doing a special right now for $200 off of one-on-one tutoring that comes with both textbooks, lifetime subscription to the textbook swing scanner, which is really, I feel like, what a good majority of the value comes from, and 3 to 5 sessions with me for an hour and a half, 2 hours. It's really not even limited to 5. If you need more time to get on the specific curriculum that I work off, I'll go more calls, whatever it takes. Most students get it done within 3 to 5 calls. And it comes with both those textbooks. You can choose the physical option on the website, or you can choose the ebook option on the website. Either way, you'll get $200 off using the code MARYTA. And that's the way to get in there. So let's get into the newsletter here this week. There's some pretty important things going on. Last week was obviously very bullish. It's been very bullish ever since Powell and the Fed started indicating they're going to kind of hold back on maybe some of the quicker increases in interest rate. It's really, I mean, they wish it was only up to them. This is a worldwide situation, and demand is coming from all corners of the globe. China's reopening, and they actually increased their reopening measures this weekend, even though they're seeing record highs in COVID. And that's going to create demand issues that are going to shock the system a little bit again. And regardless of how high interest rates are, if there's more demand for the same amount of products, that creates a price issue and an inflation issue. So the Fed wishes that they had control over this, but it's really a worldwide thing. And it's going to be very difficult for them to somehow hone it in domestically while it's raging out of control. I want to talk about really quickly about this oil situation. They just put a cap on Russian oil, Western nations. So Europe, the EU, US, they put a cap on Russian oil. And the way they did that was most oil shipping firms and almost all insurance firms are based out of Europe. So for them to insure or ship Russian oil to a customer, they have to guarantee that the price is $60 a barrel or less. Russia obviously said, we're not going to follow through with that. But Russia also, over the last 2 months, has been accumulating a fleet. I think I read something like 110, 115 oil tankers that they have. Somehow they have to get those insured, I guess. I'm not into this industry so far that I understand all the metrics here, but the fact that they have the shipping, that they accumulated that fleet of shippers, would suggest that maybe they are worried about this $6 cap. But let's think about a cap. We don't have to get too far into it, but these two charts show supply and demand. On the left here, this chart here, that middle point is where price and quantity are in a market equilibrium. So that is how prices end up where they are. Supply, demand, price equilibrium. If you were to move over here, where we've put this blue line here as a price cap, you can see how demand is way over here and it far outstrips supply if there's a price cap. This chart is very general, and it's really more showing specifically what would happen if this whole product category, every single product, was put a price cap on. And in this case, it's just Russian oil. There actually is still plenty of oil from other countries that doesn't have a cap. But putting a price cap on part of the supply would have an effect of creating a little more demand than would have been had the price been higher, which might lead to unintended consequences like domestic prices of oil increasing. And if that happens, which it kind of looks like it's starting to happen, the trading opportunities would be low float oil, domestic oil companies that are not low float, but then also there's going to be volume in low float oil if we do see a spike in oil prices. And this will be rapid. It's not going to be one day, but we'll know the effects of this price cap if it was maybe not studied close enough and it's causing price shocks. We'll know pretty soon. So if we start seeing oil prices go up 2, 3, 4% a day, which is a pretty good jump for a barrel of oil, that's where I'm going to start focusing in on low float oil. With China reopening any further, there have already been some pretty big monsters. BILI, I hate when I miss BILI because it is just a monster if it hits a low. XPEV went crazy too, even after getting downgraded. So China reopening is going to lead to just more bullishness in Chinese tickers. Anything that hasn't started to come off the base is worth looking deeper into, especially the actual real companies. And I know I'm saying this out of China, maybe this time it's different, whole thing. There's a lot of scams coming out of China, but they've changed the way that the US audits their accountants, and there's a little more believability in a lot of these bigger companies. And if they're still oversold and actually producing a product, you can see them go pretty big, just like we saw BILI just go last week like nuts after their earnings. I do think that this week is going to be bullish. People are worried about that 0.75 increase in interest rates because of the really strong jobs numbers. But like I said earlier, the Fed must realize that this is a global situation. And I changed the word in this paragraph. I had said that it would make it almost impossible to tame domestic inflation. And I changed it to incredibly difficult. I don't know why. I mean, I felt like in my head, I should give respects to the Fed, that they're very smart bankers and perhaps they can figure it out. But this is a major global situation where demand is increasing, and as every other country catches up to, the US is reopening. So inflation is going to be rough. Let's get into the newsletter here. First one on the list, SONN. They were on the textbook swings scanner on Friday, which is free if you get in the tutoring. The textbook swings looking for basically the beginning of a bullish expansion. And you can kind of see here, we have a few signals that are really starting to show up strong. So I have PPS and scalper. If you zoom way in, you can see gray and green upwards pointing arrows. TTM trend, that's two back-to-back blue upwards pointing arrows is your TTM trend. That is objectively the majority of trades above the average price during those candles, which means bidders are more excited than sellers to make their move. Really, everything is bullish here. Things that aren't bullish, the VWAP to weighted moving average, when it's underneath that blue line, the blue line acts as resistance. So we're looking at like 120 to 125 as, you know, probably the highest it could really get, unless it breaks that blue WMA line. I put 133 there because if it does break that WMA line, we'll have a little bounce off of it and it'll become support. So if that WMA line becomes support, that's always a great moment. And it creates a little bit longer of a trend. So that's what we're looking forward to. But even if it doesn't break it, the fact that we can get from, you know, somewhere around 105, 106 maybe to 120 would be a great, you know, 3-4 day trade. You can see how the strong bullish overall consensus, just the bullish technicals far outweigh the neutral, and there are no bearish ones right now. XOS, if I had seen XOS before close Friday, I would have grabbed it. The chart looks incredible, and that accumulation distribution right here, this little line going up while the price is coming down, that is a window into, you know, what's going on behind the scenes, the manipulation of the market, so to speak. And that's showing that fast moving large pockets objectively are buying that dip. And when I think fast moving large pockets, the first thought that comes to my mind is market makers who are allowed to keep their profits, get compensated for losses. Their job is to accumulate shares during dips so that they can provide demand or provide supply when demand increases. So to me, it feels like they were saying, hey, that 70 to 60 was too much. 70 made sense to market makers. 70 to 60 was too much. Market makers scooped up that. And at the very least, it seems like that's what they're going after. This is another one where the WMA is above the VWAP. That blue line is above my black VWAP line. That acts as resistance until it breaks it. And you can kind of see how here it tried, but it kind of got rejected. That could happen again, but that's quite a big move there, 60 to 80 cents. That would be a nice percentage. And I feel like that accumulation distribution is kind of suggesting that's possible. It looks like I did not do my job over here. I left. I don't know. I didn't. I'll have to re-edit this when it gets online. But over on the right, ideal entry range is around now. I would say like give Monday a second to form. The Williams is kind of right on. But I would think that somewhere between like 58 and 60 cents would be the best ideal entry, using a stop loss below that low. So a stop loss of, you know, 54 cents would be ideal. Again, sorry about this data over here. I'm not sure why that didn't save, but I'll get that edited on the website. Next up, CANG. It's like all of these, we're gonna have to start all over again. CANG, didn't get the data on it. We're gonna skip that one for the video newsletter. And that way the people on the, who look at the real newsletter will get to see real data when I edit that. Let's go to BOXL, BOXL. This is basically, it runs with online education, which we saw quite a few. FHS was going, EIQ was going Friday. There were a lot of online education plays going Friday. And this one was showing one of my favorite signals, which is, look at this. So the right corner of this box here, low relative volume, bigger relative volume, bigger relative volume, bigger relative volume. For relative volume to grow 4 days in a row is not random. That is not a pattern that us retail traders can make. That is a pattern that organized, strategic, large pocketed buying that is more medium-term thinkers than those market makers are making those moves. And to me, that suggests funds, insiders, institutions, banks, things like that. So I'm really excited about that relative volume sign. The fact that BOXL didn't take off Friday felt like an opportunity. When it jumped to 45 cents, it was like, damn it, I missed it, you know. But as soon as it came back down and the technicals stayed pretty bullish, I was really interested. This accumulation distribution is kind of interesting because it did spike with price, which is normal, which is why it's here in NA. It is normal for that to happen, but even before the price spiked, see, it went up during that dip there. So that was a pretty good sign that market makers were disagreeing with that 37 cents. And they were using it to accumulate. So BOXL made it a strong bullish too. I'm already in this. I bought it Friday with the alert group. And you know, I plan on swinging this to 45 cents. That is the WMA line. And if we can get it over that WMA line, we'll have a breakout. That really is dependent on if the VWAP can break above it, or if maybe we can just catch, you know, some lower volume price spike where the VWAP doesn't go with it, but the price actually gets above there, which happens, but you'd have to be very quick to catch it. All right, POET, P-O-E-T. This one caught my eye. There's something major caught my eye here. I don't know if you can see the number above the box there, $6.71. That is the implied volatility right there, plus or minus $6.71. Based on whatever spread the options traders have, TD Ameritrade, Thinkorswim, has that calculated as $6 plus or minus based on whatever this upcoming catalyst is. I don't know what the upcoming catalyst is. I'm going to do research and I promise to report it to you guys on Discord. But something is causing options traders to put bets way above $3.01. And the fact that $6 is more than $3 is bizarre, because hypothetically, this is supposed to suggest that if the catalyst that's coming up is a bad result, it would fall by the implied volatility amount, but you can't go below 0. So that is a really, really interesting number. That really grabbed my attention. I don't know what could cause so much volatility. I've seen it maybe 2, 3, 4 times in my life where that number is higher than the actual number. And it is always a mystery to me, but it's worth researching. What is this catalyst that options traders are so excited about, and seemingly so excited they're willing to bet on $9 has a potential price here. The technicals are coming around, right? The ones that are bearish are late bearish. That PPM, the PPS TTM scalper, that green and gray, it's the right side of the box there. That's just, you know, it's 5 or 6 candles ago. It could have had its play and switches up. So we're looking for a scalper and a PPS, a green and a gray arrow, just to show up Monday. And we also, what's really fun here is we've got that VWAP. So here the price is low. You can see the black line is below the blue line. It tries to get above, gets rejected, tries again, and succeeds, right? So that right there is when the blue WMA line switches from resistance to support, bounces above, and then it tries to come below, but look at that, it holds. The VWAP holds, and it pops back off of it. We're looking for that to do it again. And this is usually the beginning of a medium-term bullish trend, where you'll see something go bullish for more than just a couple of days, sometimes even weeks. And you can see how long ago, I mean, it was a while back where it got rejected and it was trying to get above and it never could. And this trend lasted for 2-3 months on the bearish side. So now we just switched to the bullish side of the trend, and who knows how long it's going to last, but I really like the opportunities to get in as close to that blue WMA line as I can. and then use, stop loss within 10% of my entry that's below support. It's a really great move. So POET, I'm going to be looking for this one. I don't know. I don't know if I'm going to delay myself, if I'm going to actually play it right away. Really, it'll depend on volume on Monday morning, but I'm really interested in playing POET. Just that implied volatility is just so mind-boggling. I just want to, even if I'm wrong, if it goes, down because of a negative catalyst, I'd love to see. I just love to learn from it. I don't want to lose money, but I would love to learn from how does $6.72 in implied volatility happen from $3.01 on a negative catalyst. Having said that, if I'm in, I'd much prefer it be positive, whatever it is. Next up, VLCN. So this one was on, I don't know if it made any of the scanners on the website. It was on another kind of scanner I built that used to be the swings and scalps, but it shows like 80, 90 a day. So it was really hard to hone in on the big ones. The new swings and scalp does a much better job. But this one is showing this flat top ascending triangle. It spiked and then it went flat. And when a price goes flat like that, you're having a battle between the buyers and the sellers. And the sellers, whoever that is, it's either a person or a group of people that's like, at 120, we just want to bail. We don't want to be here anymore at 120. But at some point, apparently 600 shares from now, at some point, those guys selling at 120 are going to run out of shares. And that strength that's holding that wall is just going to disappear. And if demand keeps up, that Williams is over -50, that MACD does across, the bidders will win, and it'll spike to whatever that next level is, where some algo or some large pocket or a group of people has already placed their sell orders. Let's say it's like 138 or something like that. It'll jump up to 138 and go sideways there and stuck there until either the sellers win because the buyers run out of energy, or the buyers win because they just keep going and the sellers run out of shares. The delay here is really to try to not get it wrong on that top, because when you're buying the top of an ascending triangle, if it doesn't break bullishly, you're buying the top of a band, you're buying the top of a range. So even if it were to fall all the way down to 107, 106 to 107, it would still be in this higher low, potentially reversal bullish pattern, and you wouldn't want to sell that. So the delay here in my mind is to either get it closer, like have it get rejected and buy it in the 107, 108 range, or let it break that top just so I can get in after I know that that flat top ascending triangle is over. This could happen pre-market Monday. By the time the market opens Monday, we'll probably know if it's going to break out or roll over and fall over. But the delay is there because while most of the technicals are bullish and the ones that are bearish are shifting, there is strong resistance. And that VWAP WMA, you can see, it's very, very close. This ascending triangle, if they happen to hit at the same time, it could lead to a major, major explosion and swap that resistance into support. But if not, that resistance holds and it'll give us a lower opportunity. All right, LTRY. This one's a weird one, but it was on the scanner and I really wanted to play it. What's going on here is the VWAP is getting held up by the weighted moving average, right? It's trying to break out, rejected, tried to break out, rejected, tried to break out, rejected, tried to break out, and they're like touching each other. They're like right on each other. And, it's never, I don't think it's wise to try to beat the technicals. Like I want the technicals to show me before I do it. So I'm going to wait for that VWAP to get over the weighted moving average. And I'm going to wait for the technicals that are on the bearish side to actually improve. So the Williams under -50, well, that's enough for me. The price can't go up unless the Williams switches, and the Williams can change in one candle. It can get right over -50. So I have to watch it, but I'm not going to buy it with the Williams under -50. I'd rather just hold off. The accumulation distribution is just neutral. It's gone up with the price and all that. The relative volume made it into the bullish list because you can one to the right side of the block there's one little bar, 2 bars, 3 big bars. So we have 3 consecutive days of increasing relative volume. That is technically on paper bullish. From my subjective brain, it's kind of like it doesn't look like that much of an increase. And usually retail traders can't make that pattern. It takes coordinated effort, like strategic slow accumulation to make that pattern, but that one's such a subtle version of it that it's, to me, it's like weak bullish, but it's in bullish. We just need to wait. If this stuff doesn't get over there in bullish, if the MACD doesn't actually do a bullish cross, if the DPO MOBO there, if that blue line doesn't get above those green lines, you know, it's just, it won't be a play for me. But if this does go, these guys can be very, very volatile. And the fact that they're, you know, basically a cheap penny stock makes it even more, you know, potential gains, higher risk reward potential. So I really like LTRY, but it's going to be a delay for me. VLD, I wish this had come from my scanner. The technicals are all there. I'm surprised it didn't. I would expect this to show up on the scanner Monday, unless it just spikes off the gate. If it spikes off the gate, it might be missed because it's got to be gradual. But the technicals are all there. And if you've been trained with the textbooks or the tutoring, you know that literally every single signal is pretty much there. The scalper and PPS, I put them in neutral. Look, the scalper and PPS are right there, the top right of the block. The effects from then seem to have played out. I mean, this giant candle to me wipes out those signals, and we're just waiting for the next one, which will show up Monday. There will be a bearish or a bullish scalper and PPS. So it's, you know, if you really want to wait, you can. I would love to get in closer to that, you know, 189 stop loss, because 189 is 2 pennies below 191, which is hiding below the common of 190 as a stop loss, which means I can get now, and my downside is less than 10%. That's great with me, but I'd love to see if there's like a little Monday lull and a chance to get in a little cheaper. It really depends. This is starting to show some volume, and that accumulation distribution is really starting to rocket, which feels like the first one felt like market makers, the second one feels like market makers, and then retail catching on that, oh, market makers are trying to do something here, so they're jumping in at the last minute. And that'll be worth tracking to see if it continues Monday. VLD, strong bullish signals, everything is there. The stop loss just below, you know, the common number. If everyone else in the world buys this, I feel like their brains will say, oh, I should use it as 190 as a stop loss, because 190 is an easy number to come to. And that's a smart thing to do. 190 is a penny below 191, but 190 is a common number. If everybody puts it at 190 and I hide at 189, if the market makers do some sort of stop loss rate, they might fill their coffers at 190 and leave me alone. And that's the goal with using these odd numbers, stop loss numbers that end in 4s or 9s. That's what I really like. My range is 184 to 189. I do that because I don't want everyone using my stop loss. If we all use my stop loss, the market makers will raid to our stop loss. So 184 is below a common number, 189 is below a common number. You know, you decide what feels most comfortable with you. I personally don't like to lose more than 10% if I'm wrong. So, you know, that's part of this calculation for me. Let's do one more. This one, oh my gosh. All right, I'm glad I said one more, and it's AGBA. Look at this chart. This chart is insane to me. Absolutely bonkers. It looks like it might have been some sort of, we have to look into this, because usually when they're flat right around $10, it means it was some sort of you know, merger situation with the SPAC. So I'm interested to know what that was all about. But I mean, you can see how traders just have no clue how to value it. I mean, it dropped 60% and rose 100%. It dropped 45% and rose 55%. It dropped here from 10 to 4. That's like 60%. And then it popped from 4 to 8. I mean, that's 100% move again. So these traders literally have no clue what they're doing with this one. I wouldn't have any clue if I were to try to value it in a fundamental way at all. But based on the technicals, I would love to buy this spot here. So you can see how the scalper is green there. You can see how the scalper is green there. You can see how the scalper is green there. There's our green scalper. You can see how the TTM trend shifted blue there. Here, you didn't get much time. Here, you got 2 candles. Look at that, 2 blue candles. Williams popped over -50. Right there, Williams popped over -50 before it spiked. Right there, Williams popped over -50 before it spiked. Right there, Williams popped over -50 before it spiked. So -50, big deal. So what we're looking at is a squeeze. Those Bollinger Bands are as tight as they could be, and the TTM wave is over 0. That's gigantic. That's huge signal. Bollinger Band traders, you guys like to play the bullish expansions, will wait for the Bollinger Bands to expand and wait for 2 candles to be touching the upper band. They're going to be late by 10%, maybe 14%. If you see the TTM wave over 0, the second the bands expand, that is going to be a bullish expansion. That TTM wave has to be below 0 if it's going to be a bearish expansion. When the Bollinger Bands start to go across, start to spread wider. So that's what we're looking for. And it feels like that's coming. Just another one of those big pops I feel like is coming. Yeah, so obviously high risk. I put medium to high. You know, last week, the high risk one, I can't remember exactly which one it was, but it was I think it was WISA, I want to say, WISA, and it ran great. Monday to Tuesday was a great trade. And the high risk was, hey, these guys have said they're going to go bankrupt. They're in big trouble. And sure enough, as soon as the 35% was there, I sold out completely. And I didn't know that they were going to do it, but it didn't surprise me when, well, they did an offering and they fell to 8 cents. And that's where the high risk comes from. I don't know if these guys are at high risk for an offering. If you're in the Discord group, we'll ask Perryville if she can look it up on her a dilution tracker subscription. Maybe let us know if there's high risk of a dilution there. But you would think if there is high risk for dilution, they would have wanted to do it up there. Another signal to look at this is, look at that relative volume. Boom, 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 boom. Higher, 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 higher as the price goes down. That is screaming some sort of institutional buying, some sort of large pocket, organized, strategic accumulation. It seems to be screaming that this wants to go. A stop loss here, just like I do with other groups, with other plays, I want to get below the support to an uncommon number, but this one acts pretty funky doogie. I mean, this one's all over the place. So I gave myself a lot of range on the entry, and I'm also giving myself a lot of range on the stop loss. I'm willing to let it go over 10% because of how crazy this one is. But what I'm going to do when I make my entries, I'm going to do half, right? My first entry is going to be half of what I overall want to put in the trade. The second half, I have no idea if I'm going to be paying more or less. Maybe I'll average down. Maybe I'll average up as it starts taking off. But at least I'll have my half in there, and I'll be able to make, you know, more analyses as the week continues. If Monday this is flat, by the end of Monday, I probably will have made both entries, because this is just the potential. I know that it's just as dangerous as it is exciting, but when it hits these lows, the pop tends to happen, right? We're at a low, we're at these lows, just like kind of that pattern played out, very similar to this one. Just seems like there's a opportunity for, I mean, maybe a huge trade, right? Maybe like as much as 100%. I will never own 100% of my trade as it goes to get to 100%, but if it's running, I'll definitely be scaling out a quarter of my hold, less than a quarter of my hold, whatever, to try to have a little bit of shares make it all the way to the top to cure my FOMO, so I don't chase it after it goes. All right, guys, thank you so much for being here for the newsletter. I'm going to turn my screen this way. I'm sorry to do that to you, but I made this on Excel. I wanted to share it with you. This is the advertisement. If you're interested in one-on-one tutoring to learn about everything I've gone over today in a much more slow and your speed state, this is how to do it. Get online, use the Mary TA coupon code to drop the price. We'll immediately email you that night with both textbooks, ebooks. No matter which one you choose, you'll get the ebooks right away, so you can immediately start reading if you want to. And we'll send you the code to download the textbook swing scanner to your Thinkorswim, so you can A, get all the picks from the textbook swing scanner right to your phone, and B, you can see the inputs and mess with them and try to improve upon it. All the premium scanners on our website, the foundation for every one of them is the textbook swing, and that was the first one that really changed the game for everybody in the group, in the private alert group. And I'd be really excited to have some new students this week and teach everybody. We just got done with the last seminar, and one-on-one is a lot like a seminar, but it's your speed, 3 to 5 calls. I'll go 100 calls if that's what it takes to do the entire curriculum, but I feel pretty confident. I've had a lot of students, and I feel pretty confident in saying it's really about 5 calls. I'll do it on the weekend or after your work, whatever fits for your schedule, we'll make work. But I don't take any more than 2 students a week. So definitely email if you're interested, or just ask questions, or join on Discord, and you'll get to chat with people who've done it. So look forward to seeing you guys next week. Thanks so much. Bye.